Ladies and gentlemen, hello. This is Nils Baranger from ChartGuidance, today in partnership with Dukascopy TV. This will be our usual moment of technical analysis. The subject today will be the update of the US dollar high yield debt index. It's a review because we had a first survey that was in the summer, that was on August 4th. This was the slide of August 4th. We put a warning. We moved from DEFCON 4 to DEFCON 2. It means that in August we saw that there is the downside risk was considerable. So as of today, this is the update, and what we can see is that the downside pressure is still there. There was almost a strong sell signal that was triggered in October, which failed to follow through and develop to the downside. But on that second picture, what we can see is that the momentum is now falling down, the underlying momentum, while the overlying momentum is still negative and caving down. On the next picture, which is now a monthly bar chart of the US dollar liquid high yield index, we see that the risk is not over. On the combination of the directional buying pressure, selling pressure, and variation, what we can see is that the picture is not clear. What we would like is to really have a spike on the selling pressure and the directional, like we had on the two previous times, to say that the bottom has been made, which is not yet the case. So this is on close monitoring. On the next picture, which is now also a monthly bar chart with the oscillators and the MACD, it's also on watch as the downside is still wide open. On the next picture, which is now a quarterly bar chart of the US dollar high yield debt index with the slow stochastic oscillators, what we can see is that the bottom hasn't been made yet. What is important is that the turning point will be located in the first quarter of next year, or maybe early second quarter of next year. On the next slide, also some kind of questioning with a quarterly bar chart including the RSI, the Aroon positive and the Aroon negative. What we can see is that the right bottom is made of a combination of oversold RSI and the Aroon negative, which nailed exactly the bottoming. We haven't still yet the Aroon negative spike, so this could surge anytime within the next 2 quarters. And the final slide with our conclusion. The conclusion is that if 223 gives way on the iBox US dollar liquid US dollar index, high yield debt index, if 223 gives way within the next few days to few weeks, the risk remains wide open for a tumbling to 180 into next cycle through, which is located in the spring of next year. That was our conclusion, so this is cautiousness. Thanks very much. That was Nils Baranger for ChartGuidance in partnership with Dukascopy TV. Thank you.